Good morning. Are you kidding me? The financial media headlines in the US is sort of all about, oh, the market rebounded from its lows. All is okay. Have a look at the hourly price action. The rebound was actually yesterday and the market's starting to fall again. Yes, stocks are starting to fall again. So a client of mine has been a client for sort of 15 years. Yesterday messaged me that on my, partially because of my warnings, of course he's thinking for himself, he sold all of his stock portfolio weeks ago and he's completely out of this nightmare. Downside correction in the US stock market, and it's even bigger in the Australian stock market, and it's going to be across Europe as well. And remember, European retail sales yesterday, retail sales in the Eurozone yesterday, contracting again. They've contracted for 3 of the last 6 months, 4 of the last 8 months. In the US, we saw the optimism index, the US Economic Optimism Index, weirdly named the clear markets, real clear markets. There's nothing clear about markets, but they're very real, I guess. Tip index was, 45.4? It was up 0.7%, and they're saying it's the highest number in 7 months. Yes, it's the highest number in 7 months. Isn't that great? But it spent the last year below COVID lows. So the lowest level of optimism in the US economy at the bottom of the lockdown period of COVID, the worst of COVID, that level of optimism was high compared to where it is now. The trade deficit. Have a look at the US trade deficit. Again, COVID lockdown levels or worse. People in America, do you know how bad your economic situation is? That you're going to have to pay so much more interest on your borrowings going forward because of massive government overspending. Do you know that, you know what your number one budget expense now is in the US? I'm not knocking you, I'm trying to point it out to you because your country needs to be saved to a certain degree. Still a great country, of course. But it used to be defense. Now the biggest item in your budget is the interest payments on your borrowings. Not repaying the capital, just the interest is now a bigger expenditure for the US than the defense budget. I mean, and that's why US bonds are going to fall. Prices are going to fall. Yields are going to go up, regardless of what the Federal Reserve does, because the rest of the world simply won't buy your bonds unless it's a good risk-reward ratio, and at current pricing, it doesn't really look that way. And that fall in bond prices is going to add to the weight on US equity markets. So US equity markets, look at the price action, warned of the crash. The crash is happening, but it's still only the early stages of this stock market crash. This is just the beginning. It isn't over. Look at the price action. An attempt to rally that is now faltering. I said I would be wrong if we had a strong week and a strong Friday close on that week, building on that week. Price action would confirm I was wrong. At the moment, we're getting nothing but price action to confirm that my warnings are valid and try and rescue traders and investors around the world. Be careful. These markets can fall a lot further. The economic fundamentals aren't strong. The central banks don't know how to react to contemporary inflation. This is across the West, including Australia, Europe, right? Central banks that don't know how to react to the current fashion of inflation, governments that put their heads in the sand and just keep spending big to solve problems without real structural reform to rescue their economies. As their economies are slowing, as business and consumer sentiment plummets, as I've said before, small business sentiment in the US is at depression levels and consumer sentiment is well below COVID lockdown levels. There are real problems, but those with the levers of power to change policy don't understand them and aren't doing anything about it, which is why I am so fearful about how long this stock market decline could go on for. I've warned it could be months or years. That's to stretch your imagination so you're aware of what is possible. In 1929, if you bought stocks in 1929, guess how long it took to get back to break even, no profit? 25 years. Took 25 years to come back. don't think you can just ignore a stock market downturn if it is of this quantum. Be careful out there. Have a great day. Thank you.